So what are you expecting then in terms of growth and unemployment, Kevin? I mean, here we are worried about the economy overheating. You see these markets,
Sure.
with these wild swings because people are wondering if a stronger economy is going to lead to inflation.
Right. Well, and it's a natural concern, and it's something that it's important to talk about. So it's the perfect question for right now. The fact is that all of the steps that the president's team have taken, along with Congress, have been supply-side steps. So we're increasing aggregate supply by cutting the cost of capital and luring money back here that was stuck offshore. That's increasing supply. That's driving the economy up, but not in a way that's inflationary. Imagine if we had followed the Obama playbook and we had spent billions of dollars on clunkers and so on, right? Then that would be a big increase in demand, and that would be inflationary. That would be the kind of thing that the Fed would have to pay close attention to because of the inflationary risks. But if you increase supply, you put downward pressure on prices. And so that should actually help us grow in this sort of 3% range for a longer period without igniting runaway inflation.
So what are you going to be looking at in terms of whether or not there's a worry out there or something on the horizon to upset this expectation that we're going to see real growth and that growth is going to pick up over the next decade?
Right. I think that the thing that, and you cover it every month when it comes out, the thing that we're going to keep an eye on most of all is the advanced durables data. In the advanced durables data, they got orders and shipments of non-defense capital goods. And so those are the things that really ought to be lifting off. You know, capital investment in the U.S. went negative at the end of the Obama administration. We need that to turn positive in a big way. Over the last few months, we've seen that they're heading in exactly the direction that economic theory would predict. But I want to continue to see month after month strong orders, strong shipments, and hopefully even orders above shipments, which means that the future shipments are going to have to catch up to the orders, and there's really good news in capital spending.
Kevin,
but I think that if those were flat this year, then that would really be a puzzle for the people who've been advocates of this bill.
When does the spending become the priority for you because of these deficits? When do you feel like, okay, it's time to focus on entitlements now? We know where the growth in spending is going and is. We see that, these entitlement programs like Medicare, Medicaid, Social Security are going broke. They are going to go broke in the next decade or so. So when do you start saying, you know what, we need a real plan on the table?
Right, that's something that I can tell you there's nobody here that isn't thinking about that and watching things carefully. But political judgments like how we time this or that are not things that are run through the Council of Economic Advisors. As an economist, I can only say the sooner you address the problems, the better. That we don't want to have what happened in, say, Greece happen in the U.S., where all of a sudden they're cutting pensions because they don't have enough money to pay them. And so at some point we have to get ahead of the curve on that. But that's a very difficult political process. The last time it was done successfully, it was actually managed by Alan Greenspan with the Greenspan Commission, and that was what, like 50 years ago now?
Wow, is it 50 years ago? Come on, give me a break.
Maybe it was 40.
It's not 50 years ago, Kevin.
It was a long time ago. What was it? I felt like
maybe you're
50
right.
years
maybe it
younger.
was 25 or 30. I'll check on that.
It was a long time ago.
But let me ask you this, because we're seeing the economy obviously get better, and we're seeing economic numbers come up. Are you expecting the money from overseas to come back in a big way? I was surprised at the 15.5% repatriation. And on the spending side of things, Kevin, real quick here, I got to ask you, I know that we had to pay for the military. Paul Ryan joined me the other day last week and basically said they had to give to get. But should they have pushed back on some of these spending from the left to say, look, we can't spend an additional $300 billion?
Well, I think that you're right that in the long run we'd be in a much better fiscal situation if they had been able to do that. But the political judgment about how, to get people to agree to a deal is not something that I'm expert in. The one thing I can say, the last point, circling back to the 3% thing, we look back at the economic reports of the president going all the way back to Truman, and the median growth forecast for the economic report of the president was always that GDP would grow about 3.2% per year over the next 10 years. And that growth forecast, the median going all the way back to the 40s, was the forecast of the Obama administration for the first half of the Obama administration. And so our forecast, which you mentioned, as many in the press have, is a rosy scenario, is actually 0.2% below the median forecast of all CEAs in all of U.S. history. And the only thing that we're doing is going back to normal. I think the Obama administration folks decided after they had regulated and taxed the economy into 1% growth that was the new normal. That's where we're going to be forever. And so somehow now this idea that we can just have normal again as a rosy scenario is something I just kind of reject.
Well, listen,
I wanted to get that in at the end.
I get you. Normal should be 3%. We've seen it before, obviously. What my question was really about was that it was consistent every year for 10 years. And I don't know how. I don't know how realistic that is. I get you on 3%, and I agree with that. We need to get back to normal levels. This economy has been starved as a result of regulation and bad policies. But in terms of expecting 3% plus for 10 years, isn't that a reach?
Well, I think there'll be 3.5s and 2.5s, but I think that the average of 3% over 10 years it's pretty much what we should expect in a normal economy.
Okay. Kevin, great to see you, sir. Thanks so much.
Great to see you always. Yeah.
Thank you so much for joining us this morning. Kevin Hassett there.